You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the SPIKES Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with SPIKES. Learn more about SPIKES at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for information purposes only and are not intended to provide and should not be relied on for financial or legal advice. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
Welcome back to Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. Speaking of the website, if you guys haven't checked it out, head on over there if you haven't been there in a little bit, or if you have been, tell us what you think. It's got a brand stinking new coat of paint on there, all sorts of new functionality, more to come. So if you have something you'd like to see us add, by all means, let us know. And just let us know what you think about the new revamp, the new redesign. We'd like to keep things fresh and exciting for you guys, the readers, and indeed the listeners. Of course, you can get all the audio there. You can get all the articles, all the fun stuff you come to know and love, and some more. So check it out, theoptionsinsider.com. It's going to look a little different. It's going to be a little more fun, which is our goal at the end of the day here. And, of course, however you listen live after the fact. Unfortunately, no live this week. Don't blame us. Blame the Mixler, folks. They've had some massive outage over there. I know you guys have been hitting us up all week. Where's the live? Where's the live? Hit up at Mixler, MIXLR. No, let them know you're mad. We've told them they have some massive outage. I don't know what happened. They've been pretty much down all week. We haven't had a chance to do any live shows this week. But if I do sound a little bit different, it's because I'm still coming at you from our southern studio here, not the studio in Chicago. So, but still, you can enjoy this, of course, on your podcast provider of choice. And you still keep those questions coming. We do like to hear from you guys. And joining me on the old program today, let's start off. He's like me. He's supposed to be on vacation, but instead he's talking to you guys. He is the rock lobster himself, Mr. Andrew Giovinazzi from OptionPit.com by way of Carmen Line Capital. And guess what, listeners? He's not in the options mecca known as Maine. Nay, he is far to the west in Carlsbad, California. Mr. Lobster, what are you doing out there, sir?
Well, it's good to be here. I am doing a seminar tomorrow in La Jolla Village. So I'm hanging out in Carlsbad with family, which is good because I don't get to see them enough. And I'm going to do a seminar actually in Carlsbad and in Sacramento in the same weekend. And then I'm going to Chicago. So it's an awful lot of travel for a Mainer.
Back to Chicago. I just saw you like a couple of weeks ago. You're already back in Chicago. What are you doing there?
Yeah. We're Carmen lining. So
yes.
we were option pitting last couple of weeks ago. Now we're Carmen lining. So, all the hats. Got a lot of hats.
I do love La Jolla. I've been out there a number of times. That's what I always, every time I go out there, I always say, I think we need an Options Insider West. Then look at some of the price tags for things out there. So I think we're good. But yeah, I can see why there would be some assets in need of some options hedging and or income, given what's going on out there in La Jolla. A good spot, sir.
It is a good spot. Well, if the guy that ran McDonald's, this is where he chose to live. It's not a haven for people needing a few bucks.
Yes,
that's for sure.
That is true. I do love them. Every go to San Diego, I always swing by La Jolla beautiful area up there. And also joining us on the program today, hasn't been on in a little while, he is Matt Thompson, one of the infamous Thompson twins, now a managing partner over there at Thompson Capital Management. Matt, welcome back to the program, and congrats on launching your own firm there, sir.
Hey, thank you. I think you guys are pronouncing it wrong. It's Lajala.
Yes, Lajala.
Yeah.
Everyone loves and knows and loves Lajala, California. Very, very, very popular place. But really quickly, what's behind the Thompson Capital Management? What's going on over there, sir? When did that happen?
So we started our own firm we got registered in April. So we're a registered investment advisor in Chicago, and we manage portfolios for other advisors and for high net worth individuals with a VIX flavor to all of them.
Got to have a VIX flavor. I think of VIX as a bit of a salty, bit of a tangy flavor. But maybe to each their own. Maybe a little bit. Maybe someone might see it as a barbecue. Some might see it as a very sweet thing. I don't know. To me, it goes on the tangy, a little bit wild side. Maybe a little bit spicy. If you got that VIX. That should be the part marketing for your fund. If you got the VIX flavor, and then you should have little hot sauce bottles at your booth. I say I've done all the hard work for you. That's why you come on the show. You get the answers. You get the answers handed, spoon-fed to you on this program. Speaking of coming on, we were going to be joined on a bit of a sad note, we were going to be joined by our old friend, Mr. Russell Rhodes. Going to be a bit of a triumphant return of Russell's weekly rundown, but I found out not too long before showtime that unfortunately his father passed away suddenly yesterday. So our thoughts and condolences out there to Mr. Rhodes and all of his family, and he's off dealing with all of that right now, and we wish him the best in these difficult times as we keep on rolling right on into the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review. This is indeed the portion of the program where we break down the week that was and indeed still is from volatility trading and trending and analysis and all those fun perspectives. Mr. Rockloss, I made a joke before showtime that we're doing the Vol show on the day that's kind of the least volatile in the market, and he's kind of right. It has been an interesting week, a very topsy-turvy week from a market perspective. Some weird days where the market's rallying and volatility is rallying. Don't see those too often. And then today, of course, coming into showtime, we're seeing pretty much a relatively tranquil day. We've seen the Dow, S&P, and NASDAQ all kind of mixed. The Dow up slightly, S&P off slightly, ever so slightly, pretty much unched, and the NASDAQ off not quite 0.25%. So leading the charge to the downside. It's the most firmly in one direction, but even then, not a ton, not even 0.25%. So we are seeing a little bit of lift on the commodity space again today. Gold up slightly. Gold's had quite a run. If you listened to TWIFO yesterday, you know all about that. Crude oil as well on the heels of all these tensions in the Middle East, still continuing to feel a little bit of a lift. WTI at about 57.5 right now coming into showtime. And of course, all of this green, we've been prognosticating, pontificating about all things volatility for a while here on the show. And we were even saying at the end of last show that I kind of had a feeling that things might be sticking around a little bit, and we're kind of at somewhere around those levels right now out here in VIX Cash. With VIX Cash, we were joking on previous shows, hovering close to 16. It seemed like it was glued there for a couple of weeks, then it finally broke through it over the course of the last week, broke through the 15 handle actually, got all the way down to 14 and change, and it's kind of still at those levels right now, kind of almost unched on the day too, right around 1475 or so. So let's look really quickly, Mr. Rocklop. So let's see how that puts me for our crystal ball. Because last week I had a bullseye at the beginning of the show, and then by the end of the show, of course, things had changed. But at the beginning of the show, triumphant. You know how that is, Mr. Rock Lobster. Let's see. Right now, I'm at a 15.25, so I'm about half a handle away. I'm not looking too bad. Mr. Meatball was at 14.35, so he's not looking bad either. If it goes in either direction, we're looking pretty good. But you know what I did? I went first, and then Simon immediately carped me from T3. I picked 15.25. He went 15.10. So 15.10, 15.30. He went right around me. So he completely carped me. So I have pretty much negligible chance of winning due to his.
So he's never going on the show.
Yes, that's what I said. So enjoy your last appearance on Volatility Views because you will never be on again, sir. But yes, so it was looking good for me now with that infamous carping not so much. But that said, let's go on. Let's actually start with our guest. He hasn't been on in a little bit. Mr. Matt, who likes to hang his hat in La Jolla. What's been catching your eye out there in VIX land these days?
Well, this whole month has just been obviously this push lower in vol, off that kind of deck we had in May. And then, this week obviously was the big one for us it seems like the VIX, the Fed put has come back into the market. And so you had a big drop in vol on the Fed announcement on Wednesday. It seems like a rate cut is pretty much guaranteed here. So really, we're just sort of steady state, volatility is coming in. And what we're most concerned with now is, okay, the rate cut, is that going to be like a 1995 like insurance cut, or is this going to be a 2007 they're too late kind of cut scenario? So that's really what is going to matter for vol.
That is, and I wanted to have you guys on for a while to kind of pick your brain about all the fun flatness in the vol space, because I know you guys live out there, and we'll get to all that in a little bit when we dive into all things VIX futures. But first, while he's enjoying the lovely scenery and indeed the seals out there in La Jolla, Mr. Meatball, Mr. Rocklofs, I don't envy you. It's a difficult task to focus on volatility when you're in such beautiful surroundings, sir. But what was catching your eye this week? And you're right, today, kind of the least of the days from a vol perspective this week.
As you know, by the way, the seals have a lady that watches people. You can't talk to the seals. Don't get too close to the seals. Don't talk, because you don't want to upset them.
They have a watcher?
Seals.
The seals have a watcher?
Yeah, there's like animal lover busybodies that kind of troll the tourists. Don't get too close.
Really?
Right?
People is that a problem, talking to seals? Is this an issue, a known issue in La Jolla?
Apparently, because they have the seals kind of congregate in the cove. They've basically taken away the beach for like the kiddie beach is now no longer for the kiddies because it's for the seals.
It's for the seals. Okay.
Anyway, except for those are the kind of problems La Jolla has, by the way.
Literal first world problems.
Literal first world problems. Well, and by the way, Matt is a great, if you're looking for a guy to follow on Twitter, follow Matt. He's also quite entertaining with his tweets. So just, Matt Thompson, Twitter, you'll find him.
It's
most of the stuff has
Wall.
Yes, that's it. That dynamic wall. There you go. Because his tweets are about VIX, so definitely worth following if you want to learn something about VIX. Besides me, but I don't tweet that much because my view is I do that for the paying customers. Although I do put a couple blogs out a week. But anyway, so I think vol is an interesting. I wrote earlier in the week about the value of the straddle kind of being pinned, the at the money straddle around $88 or $90. Like, let's call it a 2.5% move out to July, and that's kind of what we've had. It's been, this is we're like in an extended earnings period where the market's looking for some sort of relief. Are we going to cut? Are we not going to cut? So it's like, we have earnings in July, right? Where, okay, that Microsoft straddle is not going to move from $5 basically. And we have something similar with SPX volatility. And, depending where we are on the time cycle for VIX, as we get closer, that's going to leak out, but it's going to push farther back. As VIX starts looking to, later July and August and all that stuff, as we go on a month. So you have this kind of suspended animation for vol because, the market really wants this relief cut. I think it's sort of a, like when the U.S. would go in and battle, vol just would tank. Historically, and the market would launch. I've gone through two of those, two at least, maybe three. So you're at this thing. So it's a strange spot for vol, which makes it hard to trade. So if you want a vol trade now, it's tough. I think you probably could get some future erosion, stuff like that. But unless there's like other more strange headline news, I think you're probably going to see real benign vol conditions. Like, I would be surprised if VIX Cash was more than 20 cents, and that will be my crystal ball from where it is right now at the end of next week. I don't see a reason for it moving. The market wants a cut, and it seems like they got the right language for one, and the Feds are going to try to just basically hold everybody's hand through the trade wars until they're done. I don't know, they're taking on like the the epic proportions of, the Clone Wars and Star Wars 4 or 2 or whatever. It just don't go away, and they just keep spreading, So
I like it. The Clone Wars of volatility. I like it.
You like that? So it's at some point it will subside. It's just, I think the Fed they're gonna sort of handhold the market until, some kind of trade deal happens, and on we go. And then you got the wild card of Iran getting a little bit bent that nobody wants their oil, or so I think that could definitely pick up a little as well. So you got this weird thing where, I don't see gold volatility going down. I guess we'll hit all that and the other stuff. But as far as like VIX goes, I think VIX is going to kind of be stuck because the straddle's stuck in the SPX, and that's where VIX comes from, and it's going to be like that unless we have another funky shock to the system. You'll say.
The volatility Clone Wars. Who knew we were in the middle of such an epic conflagration? I had no idea, sir. So,
I know you like your illusions. We try to stick in one of your favorite movies. By the way, anybody goes to the Options Insider, the mega grand headquarters, there's all these little, all these dolls and critters and creatures hanging off the wall, when you're doing the radio show live.
It's meant to distract you.
He's quite a collector. He's trying to, and then he has a big cheeseburger there with, with an Ewok or something like that. So there's all kinds of stuff going on.
We have quite a bit of fancy,
that in for you.
Quite a bit of fancy accoutrement there in the studio. But Matt, I didn't tell you before the show, you were actually holding down the MIAX hot seat this week. The folks at MIAX out busy launching multiple exchanges and whatnot. So you're holding down their hot seat this week. So I forgot to tell you, Matt, we have to talk nothing but spikes the entire show. Are you prepared, sir?
Roger that.
No, spikes, of course, coming into showtime at a little bit north of where VIX is. Actually, almost exactly the same. They're both hovering right around 14 3/4. Usually, it's a little bit of a premium to spikes. This week, not so much. And I was kind of just teasing before, Matt, but I know you like to watch all the different products in the space. Have you been starting to keep an eye on spikes? Is it something that's worked its way into your analysis yet? Or I know you guys are pretty keen on the futures. Are you guys more waiting for the futures before you could start really lighting it up?
Yeah, we're real curious to see when some tradable products get listed around there. Futures, eventually ETFs would be awesome. So yeah, now we love the fact that there's some competition in the space, and we watch that for sure. It's interesting to see just sort of the little, like you mentioned, there's usually a little premium in the spikes relative to VIX. So we like to just sort of we're watching it and waiting for those products to come out.
Except the day you come on and fill the hot seat, of course, and you killed all premium. They're trading exactly even right now as we speak. So maybe there's something to be read into on that level as well. Our old friend Volatility, aka the VVIX, also down. Everything kind of down a little bit from last show. VIX and spikes both down about a point, and VVIX down a little over 3 points, about 3.5 handles, right around 81 coming into showtime. So, that's getting, if you've been listening to the show for a while, listeners, you're getting down towards that lower end of the near-term range for VVIX. When it starts getting into the 70 handle, then it's probably going to start moving from there. It doesn't hang out in the 70 handle too long. Once it gets around like a 75 or so, then you're probably going to see something happen to make VVIX spark back up to the 80s or into the 90s, maybe even to the triple digits. But usually when we're getting down, so we're getting we're not quite there yet, but we're getting precariously close to those levels where you might want to start turning an eye towards this vol thing we like talking about here on this show so much. But Matt, one of the reasons I wanted to have you on this week is, like I said, you guys live in the land of the mullets and the Tulums and all the various well-named strategies you guys have. But you guys live in that VIX futures curve. That's where you guys kind of hang your hat. That's where you make your bread and butter out there. And there quite frankly has not been a lot happening in that curve for at least the last month, if not longer. It's been, I think we referred to it at various times as spookily, eerily, somewhat weirdly and strangely flat. I mean, it's just been, you get out to like AUG and then that's kind of it, right? It kind of just sits there. And in fact, and then you get a nice little sell-off for DEES. You actually can roll the DEES and get like a credit. There's all sorts of weird things going on out there. So for a guy like you who lives and breathes the VIX futures curve, what has this last month or so, what's it been like for you guys? Are there setups? Do you guys have a setup for the eerily flat structure, maybe the nothing going on structure? I don't know. And then, what are your thoughts on this weird level of flatness we've been seeing?
Yeah, so it's definitely flat. I was just running the numbers. Looks like on up till today, the average for the front month and second month steepness, which is where most of the AUM is, the average of that is about 4% this year, compared to 2017 when the average was about 8% through the first half of the month. So you're about a half, the pre-XIV era. And I think that's got something to do with it, where the AUM in the VIX ETFs after XIV, after February 2018 happened, the AUM in those short products is down significantly, like down 90%. So you've got a little less kind of structural factors there making that curve steep. But I think probably the bigger issue is just the fact that the issue that the market seems to be wrestling with is that sort of this big business cycle macro type thing. Like, we're going into this earnings slowdown period, and they're going to maybe start cutting rates, and so that's a tough issue to sort of place in time. So the market is doing its best job of just saying, let's just raise the deck a little bit, and we're just going to say it's sort of flat out 5, 6, 7, 8 months. So that's our best guess there, and it is a tough. If for a VIX curve trader, that's what we do, is we follow that curve around, and it does make it a little harder to get like a clean signal out of that. But this kind of reminds us of this setup reminds us of kind of late 2007, the fall 2011 period, just before that actually. And then also the last little slowdown period we had in 2015, 2016, when they tried to raise rates like a few basis points and then backed up on that. So we tend to see this around these big sort of inflection points, and that's just kind of how we're treating this. So we're just we're kind of hanging back here and letting this thing, at some point it's going to make up its mind either higher or lower. So
this has kind of been like a sitting on your hands time frame, right? Because there's not really a lot. Sounds like you guys can do in this type of environment.
Yeah, we've been, there is this month has been pretty good on the short side, but it's still it's definitely a marginal signal, so we just have to approach it a little bit more cautiously.
And Andrew and I have remarked in the past on this, and looking at the curve right now, coming into showtime, we were at roughly about a 1670 for that 2 months out, that AUG future, and you go all the way out to DC, and it's at a 1690. So it's pretty much actually comes off. The NOVE contract's about a 1715, and it drops off to about 1690 for DC again. So they're pricing in a very tranquil end of the year again. I know seasonally that makes sense historically from a seasonal perspective. That usually is a tranquil time, but you think there'd be a little bit of recency bias baked into that. The last couple of Decembers have not exactly been super humdrum times. Are you surprised, or I should say as surprised as us, that they're baking in such kind of nothing towards the end of the year?
Well, yeah, it's. I think the market can't really help itself but to put that little seasonal dent in the curve. So there's always that little dent, December dent, just because of the calendar in that time frame. There's a lot of holidays, and then you're right. Up until the last couple of years, it has generally tended to be a quieter period. So we're a few months out still. So I'd be curious to see if how that finally shapes up. When we're talking again in like October. Yeah,
if anyone's thinking about rolling out to like AUG or SEP, you might as well roll to DC. There's no reason not to at this point. You get a nice little credit for doing it, so might as well go out there, take advantage of some discounts in the vol space. Again, it could be seasonally quiet. That could be dramatically overpriced when all things are said and done. But at least right now, the way things are pricing up, it just seems oddly aberrant. Mr. Rock Lobster, does this still resonate to you? The eerily flatness of that eerie level of flatness that's going on out there in the VIX futures curve these days, sir?
Yeah, I agree with Matt that when the market has a hard time kind of basically having a vol opinion, they just flatten everything up and raise the vol. And under normal circumstances, if we were at an all-time high, VIX would be 12, I think, at least. So, here we are, and it's, there's, they're looking, okay, so we got 3 handles about down for the low end, and who knows what's happening so they're trying to just basically pick, vol traders are just picking somewhere in the middle. That's what they do. So we're in a strange, like I said, I'm kind of sticking with the thesis of it's an odd area to price vol. If I was pricing it as a market maker at this point, what would you like? You'd kind of want to own like time spreads and crap like that. Anything where you're kind of long some contracts because you know you're not going to get shellacked in the short term for anything you own in July or August, at least for the next couple of weeks, because you're waiting for the event and then you're going to start selling the crap out of everything in the short term. So I would expect some pressure to come in because, you know, that July future actually is watching VIX Cash, but it expires the day before the Fed says anything next month. So, you know, this is a time where the calendar of VIX plays a big role in how it's all going to trade. So you can't, even if you've got an opinion which you might be right on, you have to kind of separate the vol products and the vol futures from what all the short-term SPX options are going to do. And you have to, you know, you got to kind of winnow out what you really want. And I think a lot of the short-term SPX contracts, I think that vol is going to get crushed. And as people try to finance all that back month stuff, and I wouldn't be surprised if all this stuff looks very similar to how it looks next month, unless, you know, they start to job on the fact that they're going to have a rate cut in. The market prematurely crushes the vol, which they certainly could do, and they've done in the past. And it feels like that's kind of what they did now. It's like they prematurely bought SPX up to all-time highs again. And, you know, forgive me if I'm wrong, but, you know, in 2016, all the same stuff is on the table. Like we have this trade war and, you know, now we have this problem with Iran and now we have earnings. So just the fact that the Fed is going to knock the yield down a little bit, and that gets us to all-time highs. I'm just, that's why vol is confused, because I think the vol traders are shaking their head like, what the hell is everybody doing?
What the hell is everybody doing indeed? Let's see what people are doing out there in the actual vol products today, the options. Let's start with spikes. Remember we were talking last week, listeners, huge week, just an unprecedented week for spikes. It was 15,000 contracts going up in one massive 1x2, so a huge week for them. This week, the OI kind of staying pretty much the same, actually coming off a little bit because, of course, June coming off the board there, so all those June contracts going away. We're still seeing, obviously, that massive 1x2. It was the AUG 1826 1x2 5,000 by 10,000 times, still dominating the OI easily, number one and number two out there. I think they're still looking for some more institutional paper to come in and really start playing in the space. But if early indications are what they are here, it seems like a lot of this paper is going to be similar in bent and nature to what we're seeing in VIX land, which is indeed what we expect. We don't expect different players to come into spikes. We expect the same players to come in and express similar views. And so that should be interesting to see, particularly once that future comes online and we start seeing some of these markets tighten up there as a result. Moving on to VIX options land, decent volume day, kind of a decent but not a light 'em up volume week out here. Today, coming into showtime, we had about 340,000 contracts on the tape. So actually not bad. The ADV has come off markedly over the last couple of weeks. It was pushing 700,000 not too long ago. Now it's shy of 500,000, 447,000, which is kind of a more normal summertime type of level for VIX. And so yeah, about 447. So we're actually threatening that ADV today, which is kind of interesting. Before we get on to what's trading today and indeed throughout the week, let's see what the top number one big money VIX options positions are. Let's start with number 10 here of our top 10. Back to that 37.5 strike. Has an eerie fascination for some people out there because they keep playing in it. We'll look at some of the trades that are going up this week. That strike continues to fascinate people out there with about 115,000 for number 10, July 37.5. Number 9, the July 30 is $1.22 on the tape. Number 8, our first put on the list, the July 14 puts, 123,000 contracts open there. Number 7, the July 25 is $1.23 there as well. It's just a couple hundred contracts separating those two. Then we got number 6, our second put on the list. The July 16 puts, $1.25 open there. Number 5, the July 15 puts for 133,000 open. That's the only other put. That's the last put on our top 10 here. Number 4, July 26's 143,000 contracts. Number 3, back to 37.5. The AUG 37.5. People love them. They like that strike. They keep rolling it. They like that strike. AUG 37.5 with 145,000. Number 2, the July 24 is 159,000. Taking the number 1 spot here this week. You can see it's kind of a light week. A lot of OI off the board. The number 1 spot, the July 20 is with a mere paltry 161,000 for a number one spot. That shows you how light the OI is right now. Usually that's not enough to even get you in the top 10. But that's number one this week. OI about 5.6 million on the board, about 4.3 million on the calls, about 1.3 million on the puts. Obviously, June coming off the board, taking a lot of OI with it. So we're at about roughly half of the OI where we were a few weeks ago. We were at around 10 not too long ago. So a lot of OI haven't come off the board. Let's see what people are up to this week out here from a trading perspective. Today, the narrative, once again, we were talking last week, size ratio verticals in VIX and in spikes last week. Seen a similar narrative this week. Today, the big trade out here in VIX land is 10,000 by 5,000 out in Dece. And again, this strike that people love. I don't get it. Mr. Rock Lobster, maybe Matt, maybe you guys get why people like this strike so much. We're seeing a 1 by 5 out here today. It's the Dece 26, 37 half, 10,000 by 5,000. A call vertical. The Dece 26 is going up for 84 cents. So they were 80 at 90, so 4 cents off the bid there, 10,000 times, and then going up against 50,000 of these Dece 37 halves for 35 cents, exactly splitting the uprights there. They were 30 cents at 40 cents. So obviously, if they did it probably the way people tend to do it, sell one, buy not two, buy five, then they paid a little bit for this bad boy. Mr. Rock Lobster, first off, explain to me everyone's fascination with the 37 half strike, because everyone seems to love it all of a sudden. And then B, how does this one float your boat? 26, 37 half, 1 by 5 vertical, where it looks like if you're doing it, though, sell 1 by 5, you're paying a substantial amount to get that on. Does that float your boat at all?
Well, I think the problem with this, it's not a problem with this spread and the 37 and a half strike. It feels like that is sort of the near-term high for VIX. I think Matt will probably correct me, but maybe is that what we saw like in December? Maybe it probably got around there. Cash, not future, but cash.
Cash got to 36 and change.
So there, I could see that maybe somebody's looking at recent history and saying, okay, we're gonna buy that stuff, and golly jeepers, who knows what they have against it. And maybe they're looking at December as relatively inexpensive. So, the problem with this December product is it just isn't going to do anything until December. It is a darn long hold. My guess is something like this is against something else. So they just want to buy just a bunch of upside, and they're just backspreading the crap out of the vol. It would not surprise me, though, if they bought like VXX puts or something like that. That could be an interesting type of trade because, if the Fed does do this thing with rates, and okay, you can make a rosy scenario in a vol crush, and VXX could be down $6 or $7 in 3 months. Certainly mathematically possible. And then a trade like this might make some sense because it's kind of cheapy upside relative to what you can get on the downside. So I can make a case for this as a trade if they do something against it. I just feel like they've got to have some kind of shorty thing, or this is like a bridge too far, or they're just or long, just tons of SPY or something.
Yeah, they got to have something against it, obviously, because by itself, on its face, it's absurd. It's 1 by 5. They're paying 90 cents. This thing's got 11 and a half handles wide. So all the things we hate about these verticals is just exposed here. It's way too wide. They're paying for it, which kind of almost defeats the point in and of itself. And they're paying a lot for it. And it's in Dece. All the things that we hate is kind of exemplified in this one trade. Obviously, they have something else against it. They're probably mega short. Could be VIX futures, could be OTC variance, something else along those lines. And that's all they're really looking for is to guard against that extreme upside. But yeah, I think there are better ways to go about it than this thing. I'm not a fan. I don't know. But we mentioned also the 30 strike continues to have magnetism. That's the case again today. 10,000 more. The SEP 30 is going up for 45 strengths. People loving those as well. So 30 strikes, and now the new love of the 37 halves are apparently what everyone's all up in arms about and excited about today. We also saw today more, speaking of weird trades, a lot of $1 verticals going up this week, Mr. Rock Lobster, including today. We had the July 2021 vertical going up 6,765 times for, what is that, for 16 cents. So 16 cents for a $1 vertical. Does that float your boat? I'm guessing probably not. Yesterday we had had a 4-way roll out there. The big trade on Thursday looks like an AUG roll. It was, let's see, what were the strikes here? AUG 12. Where is it? Here we go. AUG 12, 17 put spread. That one going up against, so nice 5-handle put spread against the AUG 13, 17. So looks like they're rolling out and tightening things up a little bit by about a handle out there. Doing that 25,000 times for a total, obviously, of 100,000 contracts. Also saw some more paper coming in, not quite to the 30s this time, but to the 27s, and right in those, it seems like 10,000 times for about 15 cents. And then, actually, the 27s went up a total of nearly 30,000 times. They were a big trade this week as well. They went up nearly 30,000 times on Thursday and about 35,000 times on Wednesday. So about 65,000 contracts trading on those 2 days. The OI now coming into today's show is around well over 50 thousand. There was at 76,000 as of Thursday. So yeah, about 70,000 open on that strike. So someone's got an axe to grind there on these July 27s, and they continue to add to it pretty much throughout the week, which is kind of interesting. More crazy $1 verticals on Wednesday here. We've got this time it was July 1920 going up for a whopping 11 cents. 10,000 times this time. Someone really likes his broker, Mr. Rock Lobster, as well as looks like a July vertical. And then we got some funky 75,000 lot going up on Tuesday of, I guess you can call it a bit of a collar, maybe a bearish risk reversal, maybe just closing out something on the bullish side. We had 25,000 of the July 24 calls going up for 38 cents, so near the offer, versus the July 14-15 put spread, also going up 25,000 times. That went up for 36 cents. Looks like paper probably maybe buying that spread and then selling it. Actually, looks like it could be the other way, actually. So again, looks like they could be buying it looks like it could be the bearish, or should be bullish risk reversal. Either way, that's not opening, so it could be closing on this bad boy. So much size on all these strikes. So 75,000 total contracts going up in that bad boy as well. Matt, I know you guys like to watch yourselves VIX futures. Maybe probably watch the options as well. Anything catching your eye out here of note? And maybe you have some insight into why people are so drawn to, used to be the 30. Now I guess 37.5 is the new 30. It's the hot area. Is that one on your, is that a level you guys watch as well in your models?
37.5, not in particular. I was going to say I just did that trade just to piss you off or whatever, but
that was you. No. 1 by 5.
Yeah, right. I'm that guy. December, all the things you hate. So I'm not sure exactly why that strike is coming around every once in a while, but I think the best guess would be someone's looking at December, like Andrew was saying, and all right, if we have a December repeat, where is that going to top out? Sort of looking at there, and then the 30 strike, For us, 20 is a more important level because that's usually around the time when the curve starts to turn and starts to invert. So 30 would be pretty solidly inverted curve. So for us, I could make sense of targeting that strike to start taking profits on a long position, or getting into something for like a total crisis kind of scenario.
Yeah, that could certainly function in that capacity. I don't know about 1 by 5 and Dees, but hey, that's a conversation for another day, or at least for next week when it goes up for size again. They love their ratio verticals here in VIX land. Someone discovered these a few years ago, Matt, and they've just been putting them up for ever increasing size and ever increasing strike width ever since. So that's like, hey, it worked nicely 1 by 2 for three handles in July. Let's go out 1 by 5, 15 handles in December. Why not? What's the worst that could happen? Let's see what else here. Speaking of the worst, let's see what's going on in one of the worst products that Mr. Rock Lobster likes to call predictably crappy out here. Worse because it likes to erode. Giving a little bit of erosion. Of course, I'm talking about our old friend VXX, not VXXB. Matt, I don't know if you know this, but you're on the show that single-handedly is responsible for rechristening VXXB to VXX. We decided we did not like that name. It was not allowed to be called that anymore. And the folks that they acknowledged us, and they acknowledged the power of our audience and decided to rechristen it. So careful what you say on the show, sir. You may end up having lasting ramifications for the volatility market, sir.
Awesome. That's enough. That was something that was on my list too. So I was definitely voting for that.
There you go. See, we get things done for you here. You don't need to do it. We're out here fighting the good fight for everyone out there in the vol space. This week, you guys want that erosion, you got a little bit of it, a little bit of the juicy squeeze in VXX coming off, not quite 2 handles, about 1.7 handles or so, right around the 26 handle coming into showtime here. Today's volume, not a ton going on out there, about 60,000 contracts on the day. The ADV, about 3x that, about 190 or so out there. Let's see what's going on for where the big size is out there in VXX right now. Let's do a quick, top 5 here. Let's do number 5 out here, July. These are June, but these are obviously expiring in the weeklies. These are weeklies. These are the 28 calls. They're going out pretty much, let's see. These are going out, the 28th. So an extra week on these for about 39,000 of those. And going out today, the 45s in June. Spoiler alert, these are not going to work out. And then we've got, what we got here? We got the June 25s and 24s were big ones coming at showtime. And then all 40s out there. So we got to look and see what's going on and update now to July to see what the big paper is. Looks like out in July, it's still calls. A lot of calls leading the dance out here. In fact, let's pull up a live one right now just to see exactly how things are shaping up in VXX land, courtesy of our friend Mr. Flowmaster out there. Yeah, the June 40 still the top of the tape here, with a little bit to go, about 60,000 of those bad boys. So it has been pretty much calls dominating the tape out here in VXX land. Of course, we'll see how that changes once all that juicy June comes off the board. Officially today, the big trade out there, I guess you can call it big, about 1,000 of the SEP 53. Some more call love. They were 30 cents at 38. These went up for 37 cents, about 1,000 times over there on the Gemini. So more people opening up upside here. This is opening in the SEP this time. And then yesterday, looks like rolling some puts out there, going on out to, let's see, what was it? It's like about the big trade of the week maybe was rolling these June 24 half puts for 30 cents out to a July 24 half 23 put spread. Doing that for about 13,000 contracts, 4,400 times on each of those legs. So interesting stuff out there. We haven't seen as much put paper as you might think. So obviously someone looking to keep the put party alive for pretty much another week. That's all he's rolling out for. He's only rolling out another week, which is kind of interesting in and of itself. Matt, I know you guys really like yourselves some VXX out there. Anything catching your eye out there in the ever-eroding VXX this week, sir?
Well, it gets back to that flat curve discussion again. That so we like to say that VXX is an ETN that's made of futures and acts like an option. So get your head around that. But so the VXX is always on the move itself, and to try to pick an options structure and call the VXX price, 3 months out, you have to make tons of assumptions in there. So this is partially why we like to use like the instrument itself and kind of go linear that way. But that flat curve is making it a little bit easier on the decay. The decay right now in VXX is about 20 bips a day, just based on where the curve is right now. So that's pretty light actually for VXX. So you can start to work off that.
And Mr. Rock Lobster, same question for you, sir. Anything lighten it up for you in your vol newsletter here? That we're not quite in the zone of the monk, not quite in the danger zone. How's that looking for your erosionator out there for your newsletter, sir?
Right. I liked yesterday. I thought for a while we had some 13 handle for VIX. So it's set up better to buy some VXX puts. And then I hedge with some like SPY put flies. So that is kind of like basically with both sides, just kind of like baby erosion where I just, in case you have a shot for, okay, if the market craps out, you just sell your SPY flies. But if we just keep going sideways, you should have what I just call baby erosion on the two products. So you're basically trying to keep a direction, but not spend a lot of money for it. And as of right now, it's like, okay, well, it's really where that cash can hold up. And if, we stay at this level. So as far as VXX, I don't think I'm fairly light considering where I think vol should be, and where it is right now, but we're pretty light just for that fact that, I think the underlying VIX cash is going to have a hard time moving a lot. However, VXX can erode down, maybe $1.50 in 3 weeks. It's not as much erosion as I would like. I like it when it's eroding really heavily, and there's a lot more fun with it that way, because you get to buy more stuff against it. But right now, it's sort of, I would just say it's in the sort of the sliding zone. It's a hard option trade in any kind of size. I think it will be a great option trade, probably like mid-July, where it'll start to get kind of interesting. And then I like VXX when it can inflect, basically, when it has the shot to really move big. And right now, the only way it moves, it can't really move down very fast. It can only move up very fast. And I just prefer to buy just regular SPY or something like that, because the market's been, vol has been very underwhelming on the move up, even when SPY is down like 3 or 4% or 5% or something like that. So I just, at least for whatever's going on with this current cycle, I just prefer to be a little bit more directly short SPY and a little bit less long the vol products. I don't know if that makes sense, but that's kind of how that's my funky calculus for where we are in our lovely, predictably renamed VXX products.
Yes. Speaking of funky, our audience can always be counted on for some funky questions. It's time to check out your volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL, posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody, welcome to the Vol voicemail. This is indeed the portion of the show where you guys take the reins, questions, comments, insights, pearls of wisdom. Every now and then we flip the script on you guys, ask you guys questions. We did that this week. We said, hey, let's play a fun little guessing game. Looking out here, a lot of vol across a lot of different products out here. Which one do you think has the highest 1 month, so 30-day realized actual vol, not implied, not anything else, just realized vol? And no cheating, no looking at your platforms, none of that. Just use your gut, use your instincts. What are your instincts telling you? We gave you 4 choices across the broad spectrum. We gave you Tesla, not a name that's known for its lack of volatility. Bitcoin, also a name that's been exhibiting some volatility of late. Crude oil, also a name that's been exhibiting some. We went with WTI, not Brent, but crude oil in general. And then the Qs, aka the NASDAQ, bringing up the rear. All 4 products that have been known for a little bit of volatility of late. Maybe Matt, as our guest, we shall offer you pride of place before I tell you how our audience is voting. What is your vote if you have one, sir? And then more importantly, what do you think our audience is voting for? Because they get to play too.
Wait, I have to vote on my own vote and the audience's? Okay.
Yes, it's a very challenging endeavor.
Yes, welcome to the show.
That's trading for you right there, though. So my vote was Tesla. And then I'm going to say the audience voted for Bitcoin.
Oh, did you already vote in our poll? Well, then you are reflected in these numbers then. Interesting. Okay, interesting stuff. So your vote is Tesla, and the audience votes for Bitcoin. Mr. Rock Lobster, what say you, sir, while you're busy watching the seals out there in La Jolla?
Exactly. What I got to do is, okay, you're saying God, of course, I'm immediately trying to think back to the 30-day, what the last 30 days has done. I don't, WTI, what is it, in the 35-40 range? I didn't know. So it is between Tesla and Bitcoin. I'm just going to say, since the audience loves Tesla, they're going to go with Tesla, but I think Bitcoin, because I could swear that it's been more volatile. I'm pretty sure. I'm going to go because it's like 10% relative move. So I'm going Bitcoin is what's been the most volatile.
I purposely haven't calculated the answer yet because I don't want to give my answer because I don't want to color the voting. We still have a few hours left here in the poll. Make your voices heard at Options is the place to go, listeners, on the old Twitter machine. But I do know, the one I did know by heart coming into this week was at about a 93-95 realized was Bitcoin, because we do that crypto show, obviously. So that one I had beaten in. So I will say I'm leaning that way, but I don't know. I haven't crunched the numbers for Tesla to be sure. If I had to go with my gut, which is the point of this poll, I'm going Bitcoin. But we got to vote here for Tesla. The audience is kind of pretty evenly split. Well, whopping 3% for the Qs. No love for the Qs. But then the rest, 29% for WTI, 32% for Bitcoin, and 36% for Tesla. And it's kind of ebbing and flowing every day. So it is interesting to see. Everyone's kind of like everyone. Everyone out there is like you guys on the show here. Everyone's kind of split. These are all very volatile products. It might come down to a bit of degree as to which one is the most volatile. Don't worry, we'll go back and crunch the numbers from last Monday when we posted this, so we'll have the exact number. We'll also crunch it for this week. We'll let you guys know the exact answer on next week's show. But hey, since we're coming towards the end of the poll, I'll put my out there. I'm gonna lean towards Bitcoin, but you never know. Tesla could surprise us. It has moved quite a bit over the past couple of weeks out there. All right, let's see what else we got here in the hopper, in the chamber from you guys. Here's a good one for you, Mr. Thompson twin here. This comes from Lint 37. I like him much better than Lint 36. Lint 37 wants to know, do you think the Spikes futures will trade similar to the VIX futures when they are listed? Obviously, we talked to those MIAX folks. They're on the show usually every week. They're talking about getting that listed sometime around Q3 into early Q4, having maybe even September, having that future up and running. So, Matt, you hang your hat on the futures day in, day out. What do you think here for Lint 37? You think they're going to trade pretty much the same as what we're seeing out there in VIX land, or will this be some sort of different beast?
No, I think it's going to trade real similar to VIX futures. Probably you're going to see that same type of spread reflected in those futures too. So, just implied volatility, forward implied volatility, there's gotta be premiums with time. So I would expect, the curve to be contango when spikes are low and vice versa.
Yeah, I have a hard time seeing a scenario where it's markedly different. If there is, there's a heck of an arb there to trade. Yep. So if it does get out of way, all of a sudden we see Deese's crazy bid in Spikes futures and it's crazy offered in VIX futures. I think there'll be a firm or two that may want to trade those. So yeah, if there is some sort of crazy difference, it'll be arbed away pretty quickly. So I think the magical, mystical, invisible hand of the market will come in and correct for such aberrant things. Let's see, we got time. Let's squeeze in a couple more before we get to the old crystal ball. Let's see. How about this one? You like talking VXX. This comes from BJP. He wants to know, do you guys like, I think he means A string. Do you like a strangle here in VXXB? Sorry, I meant VXX. So you're forgiven. You're forgiven for using the wrong nomenclature there, Mr. or Mrs. BJP. But interesting one. We're just talking about VXX and kind of how we're in this weird time where everything is flat in the VIX curve, so you can't really. I might go out on a limb and say this is probably one of the times when I like a VXX strangle probably the least, just because there's not a lot. I mean, you mentioned, I guess if you want to have it, it's to the upside right now, right? Because the downside ain't doing a heck of a lot for you. Are you feeling a VXX strangle here, Mr. Rock Lobster?
I am not. I think it is. It is just theoretically a tough time for it. So any VXX put is pretty close to the money, so I'm not expecting much. And then the upside, you're sitting there and the hardest thing is buying VXX calls when you're in contango is hard, because something's got to move the ball. So, if anything, you buy some call spreads, to kind of lower your cost, or maybe some upside call flies or something to keep the cost down, because I just think the erosion penalty, even in a week, is going to be kind of hard on that product. So it's tough, a tough trade.
Yeah, it's not a trade that fills me with enthusiasm right now. I'm assuming he means long strangles. I got to have myself a long strangle on this bet. Matt, I'm assuming you had taken equally dismissive. But maybe I'm wrong. Maybe you love them here. Maybe that's a key portion of your mullet strategy.
No. That doesn't seem to make too much sense to me here. If anything, I'm just looking for slight erosion in time here. So I probably wouldn't do that one.
All right, let's wrap it up with one more here. Let's go from Merst, or maybe it's Mrs. T. I'm going to call her Mrs. T. I like that better. Mrs. T asking, we talked about this we touched on this a few times now. Will SVXY ever go back to the way it was? Thanks for including earnings vol breakdowns in your show. You are the best. Well, you're welcome, Mrs. T. Ironically, we didn't get to the earnings vol this week. Here, really quickly, just because Mrs. T asked, let me do a real quick earnings vol breakdown for her. Again, we have a lot of these great reports on our site, listeners, courtesy of our friends over there at Oratz. You can read them for yourself. This week, the big players here from an earnings vol perspective, we had Carmax today before the bell. They were pricing in about $5 and change. They delivered 371, so underperforming there pretty dramatically from a vol perspective, but not a huge vol mover here. Of course, earlier in the week, we had Adobe and Oracle with two of the big ones. Adobe was pricing in. They were at about $300 going into their announcement. They were pricing in almost 11, and they delivered 861. So they came in about $2 and change under the straddle. And the same with Oracle. They were at about 57 coming into their announcement. They were pricing in about 250. And they delivered. Actually, they outperformed about 416. So they're one of the few names that actually outperformed. In fact, Matt has been saying, we had him on our advisor show not too long ago. He said this is the best quarter he can remember since they've been crunching the numbers for premium sellers. So many names have underperformed this quarter. So of course, that worm's going to turn next quarter. They're going to tighten up those straddles, and then all of a sudden everyone's going to blow the doors off of it. So that's a very aberrant scenario. Doesn't mean you have to go out and start blasting out premium right now. But there you go for Mrs. T there. A little bit of an earnings vol love. That's a long way around to Matt. I know you like yourself some SVXY. It obviously had a bit of an ignominious fate there, where mid-session they decided to just up and change the rules on everybody. Mrs. T wants to know if we think it'll ever go back. What do you think, sir? Go back to the good old days?
Yeah. Well, first of all, I love her Bloody Mary mix, Mrs. T. And then SVXY. It's obviously it took the leverage in half. It just became ZIV basically, and I think so. Will it ever go back to 1x leverage? I think that is really going to depend on the regulatory environment. I just don't think right now, even if you wanted to list another 1x short vol product right now, I'm not sure you'd have an easy time doing that. So, SVXY, I can't imagine they would take it back to 1x because they're making the same amount of money they were before. Well, not exactly with the AUM decline, but I don't think they've got the appetite for that. But you can recreate that yourself. Just go out and short VXX and reset the exposure every day to 100% short. There you go. But I don't see it right now in the regulatory environment.
Yeah, it seems like a bit of a bridge too far for regulators to come back and say, "Oh yeah, let's get one of those mega short products out there."
Again.
What could go wrong with something like that? So yeah, I guess Mrs. T, I think what we're saying here is probably not anytime soon. But what is coming up soon now is the time for us to humiliate ourselves a little bit of the old crystal ball. All right, everybody, welcome to the Crystal Ball. This is indeed the portion of the show where we wrestle wildly, valiantly for your information and education and enjoyment here as we attempt to grapple with those finicky and fickle volatility gods out here. This week, coming into the end of the show here, spikes staying glued at that like 14 3/4 level, not really moving a lot, and VIX Cash kind of pretty much the same, right about a 14 3/4, 1480 or so. So pretty much even actually VIX getting a little bit of a premium over spikes. How strange things afoot when Matt comes here on the program here. So that means I was looking good. If it wasn't for the just complete and ignominious carpage of Simon from last week's show, I would clearly be the victor. But unfortunately, I was carped on my own program nonetheless. So who would do such a thing? So I unfortunately, with Simon, I was at a 1510 for VIX Cash, 1530 for spikes. So I was at a 15/4 for VIX Cash, 1540 for spikes. So I'll have to give it to him, even though I'm reluctant to award such behavior on my program. So I didn't win. I came in second. Simon is not here, so that technically means I could go first. But I will be a gentleman, the gentleman that I am, and I will instead turn to our guest and say, Matt, I will give you the choice. Would you like to go first, or would you like to instead have me go first for picking the vol for next week, sir?
I am going to go first, so I don't have any sort of bias here. I know, listen to you guys. I think crystal ball is a little cloudy as usual, but I'm going to say I'm going to give you an oddly specific 1591. I think vol's VIX on VIX. It's going to go push higher a little bit into the G20.
1591. So get a little bit of a resurgence here towards the end of the week. Interesting. I would not, given the environment we're in right now, I would not look askance at that at all. We've seen so much hither and yon just over the past week. I was feeling I kind of liked where I was last week here on the show until Simon so rudely carped me. So I don't typically like coming in at the same level. So I'm not going to come in exactly where I was, but I'm liking in that range of kind of the low 15 handles. I'm kind of feeling that. So I'm going to bump it up a little bit. I'm going to say 1540 for next week on the show. And if I have to do a Spikes premium, let's say a 1565 there for Spikes. Even though that premium getting a little bit tighter right now. So not looking as reliable as it once was. Mr. Rock Lobster, I bought you some time. What are you feeling? Are you going to come in and try to squeeze in the middle of us like the wriggling worm that you are, sir?
I was thinking of torturing the two of you, but I'm just going to go, you know what? I see the G20. That's certainly a possibility. However, ultimately, I don't think they're going to get anything out of it. So I'm going to go totally counter and say 1435 and hope I'm totally wrong, because that way I'll be able to sell all my other stuff for some money.
Well,
so
you're in the meatball chair, and
myself.
he's been aggressively fading for some time, so you got to at least give some lip service to that out there as well. So there's your spread there, listeners. 1435 on the downside, 1591. Matt playing the former Russell Rhodes role there of buying all the VIX he can to the upside, 1591. Me, nice and Goldilocks in the middle there, right around 1540. So there you go. Let us know what your thoughts are. Tight range for next week, so it'll be interesting to see. That means, of course, we're going to blow through it. It'll be a 19 or 12 by this time next week, so we shall see what's going on. Unfortunately, listeners, that's all the time we have for this episode of Volatility Views. I want to thank our guest, Mr. Matt, formerly of Typhon, now of hanging his hat over there at the appropriately named Thompson Capital Management. How did you come up with such a clever name, sir? And then on top of it, if folks want to reach out, they want to learn more about what you guys are doing, maybe they want to contact you, where should they go? What should they do?
I've made a beautiful website myself. It is thompsoncm.com. There's a lot of information there, and you can follow me on Twitter at DynamicVol.
I will give a second for his Twitter follow there at DynamicVol. One of the better follows in the volatility space. A lot of guys in the vol space, they'll tweet out charts and graphs, and it's kind of dry. And Matt will do that too, but he'll put a nice little zinger at the end of it, so it makes it more fun. So at DynamicVol is the place to go if you want some a little bit of lajola with your volatility analysis. Then Mark's got that for you out there. All right, and Mr. Meatball, I apologize. Mr. Rock Lobster, when you're not out there petting the seals and talking to the rich folk in lajola, what can we expect from you guys over there in the land of the pit, sir?
Well, by the way, Sebastian's claiming he won the crystal ball. He wants.
Claiming he won.
He's claiming he won. He said, 14 and change. Aren't we right around there?
He was at a 1435. So he was roughly not quite half a handle, about 0.45 away. And then
okay. What's the official measurement? Is it the close? Is it the open?
No, it's right here, right at the end of showtime. So that's the challenge of it. So it's 1435, and then I was at 15 and a quarter. So I guess technically I was at 0.4 away. So technically, actually, and then Simon was 1510. So he was 0.3 away. So Simon technically wins. So his carpage, I told you, his carpage. It would have been Simon, then me, then Mark if he insists. So what I'm saying is, if I wasn't horribly carped, I would be the victor. Yes.
Yes. What am I looking at? Again, I would be happy to see something great coming out of the G20, and China and America are getting together, but I don't think that's going to happen. I think we're stuck with this trade war for a long time, but and I think the market will adjust to it just like it adjusts to everything else. So that is what I think is going to happen. I think the rate thing is the bigger driver, because now with all this tariff stuff, people are kind of used to it. So like anything, the market gets used to it. They reprice it, and apparently we have repriced it onto all-time highs.
Yes, apparently. So if you like your trade war with a dash of war over there in the Middle East, then that's what you got. So you're a happy camper right now. And give Mr. Rock Lobster a follow over there on Twitter if you haven't as well, at OptionVol. He's starting to tweet a little bit more So
a little bit
check him out over there as well. And on behalf of the Rock Lobster and the very, 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 very grumpy umbrage-taking Mr. Meatball out there who did not win, and Mr. Matt from Thompson Capital Management, check him out at Dynamic Vol on Twitter, and indeed myself. I want to thank all of you out there for downloading, streaming, subscribing, and hopefully for listening live next week when they get all that fun stuff back working again. And we'll see you back next week for more Volatility Views.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com.